Welcome to the show. Today, we need to have a real, honest talk about your money, especially for those of you who are retired or standing right on the doorstep of retirement. When you enter this phase of life, you no longer have the luxury of playing games with your cash flow. Your financial peace of mind depends on knowing exactly where your money is and precisely when you can lay your hands on it. The question I hear constantly from people who are managing their retirement funds through modern online accounts is this: what time does money become available on Capital One? Now, on the surface, that sounds like a simple, logistical question. You assume the bank just flips a switch and your money appears. But underneath that question is a deep, underlying fear. It's the fear of a bounced check. It's the fear that your auto-drafted supplemental health insurance premium or your mortgage payment is going to hit your account at 8 a.m., but your Social Security check or your pension transfer won't clear until noon, leaving you with an overdraft, a declined transaction, or a hit to your credit score. When you are living on a fixed income, timing is everything. You cannot afford to guess. You can't just cross your fingers and hope the digital plumbing of the banking system works in your favor today. You need to know the hard facts so you can protect yourself. Let's break down exactly how Capital One handles the clock when it comes to your money, because the answer depends entirely on how that money is arriving. If you are expecting an electronic direct deposit, and for most of you, this is your monthly Social Security benefit, a pension payment, or an annuity distribution, Capital One generally makes these funds available immediately on the day they receive them. For standard payroll and government deposits, the money typically hits your account in the early morning hours, often between 2 a.m. and 6 a.m. Eastern Time on your scheduled payment date. But Capital One also has a feature called early paycheck. If your retirement administrator or the government submits their payment files to the banking network ahead of time, Capital One will often release those funds to your checking account up to 2 days early. Now, I want you to listen to me closely. Do not build your life around those 2 early days. This is where so many people trip up and fall into a financial trap. Getting your Social Security 2 days early is a convenience. It is not a guarantee. If the government agency or your pension administrator is delayed by even a few hours in sending that digital data file, or if there is a federal holiday midweek, that early deposit will not happen. The money will instead show up on your actual, official payment date. If you have scheduled your bills to automatically deduct based on the assumption that your money always arrives 2 days early, you are playing Russian roulette with your bank account. What about checks? Let's say you receive a physical check from an old investment account, a dividend payment, or a gift from family, and you use your smartphone to make a mobile deposit, or you take it to a Capital One ATM. What is the clock on that? If you submit a mobile check deposit on a business day before the cutoff time of 9 p.m. Eastern Time, Capital One will generally make those funds available to you by the next business day. If you deposited at 9:30 p.m. on a Tuesday, the bank treats it as if you deposited it on Wednesday, meaning you won't see that money fully available until Thursday. Furthermore, you must understand the rules of standard check holds. For checking accounts, standard checks are usually available the next business day, but if you are depositing a large check into a Capital One savings account, like the 360 Performance Savings, the bank frequently places a 4-business day hold on those funds before you can withdraw them or transfer them out. The money is sitting there, you can see it on your screen, but you cannot touch it. Imagine the panic if you didn't know that. You move a lump sum from an old account to your savings, you write a check against it to pay for a major medical expense or a retirement travel plan, and boom, it bounces because the funds were on a mandatory hold. The fear and embarrassment of that situation are entirely preventable if you know how the system operates. So, how do we take this information and turn it into an ironclad defense strategy for your retirement cash flow? I have 3 actionable takeaways that I want you to implement immediately. First, you must align your bill due dates with the reality of the banking clock. Go through every single automatic payment you have set up, your utilities, your credit cards, your insurance. Move the withdrawal dates to at least 3 to 5 business days after your official monthly income arrival date. Never, ever schedule a bill to leave your account on the exact same day your Social Security or pension is scheduled to arrive, and absolutely never schedule it to match an early deposit date. Give your money time to land, clear, and settle comfortably in your account before you ask it to march right back out the door. Second, establish a buffer zone in your Capital One checking account. This is non-negotiable. I want you to keep a minimum of 1 full month's worth of expenses, or at the very least, a baseline of $500 to $1,000 permanently resting in your checking account. This money is not for spending. It is a shock absorber. If a deposit is delayed by a bank holiday, a weekend, or a processing glitch, your automated bills will hit that buffer zone instead of triggering an overdraft or a declined payment. You will sleep soundly at night knowing that your financial foundation doesn't crack just because a digital deposit is running a few hours late. Third, look at your Capital One mobile app right now and turn on real-time deposit notifications. Do not guess if your money has arrived. Set the system to send a text message or a push notification the exact second a direct deposit or a check clear happens. This puts you in total control. You don't have to guess if it's 4 a.m. or 9 a.m. You wait for the alert, verify the balance, and only then do you execute your manual transfers or major payments.